Are you wondering how much you can afford for a house here in 2025? With home prices climbing, mortgage rates bouncing all over the place, it can feel very overwhelming. Don't worry. Today I'm going to break it down step by step so you know exactly what you need to do once you start shopping for your home. There are many ways to buy a home here in 2025, but we're going to go the most common and traditional route, which is going through a bank or lender. Many lenders use a simple rule called the 28-36 rule, which means that 28% of your monthly income goes towards your housing costs. That includes your mortgage, property tax, insurance, etc. And no more than 36% of your income should go towards your debts. That's all your debts combined. So that includes your mortgage plus your car loans, student loans, credit cards, and etc. All right, so here's a quick example. If you bring home $6,000 a month before taxes, your house budget should stay under about 1700. If you already have $300 car payment and $200 student loans, that's going to shrink you safely into spending on a house. All right, lenders also look at something called your DTI, or debt to income ratio. It's your total monthly debts divided by your monthly income. Most banks want this number under 43%, but the lower the better. A strong DTI helps you qualify for a mortgage, but it's mainly to focus on your interest rates. So the lower the DTI, your debt to income, the better interest rate you'll get on your loan. And here's like a little surprise, I guess you can say. A lot of buyers don't know about the expenses of owning a home. It's not just about your loan, but you also have to budget for property taxes, homeowners insurance, if you live in an area with HOA fees, and then maintenance. A good rule of thumb is about 1 to 2% of your uh, home's value will go to maintenance every year. So, for example, if you had a $250,000 home, you should expect to spend about $2,500 a year just on the upkeep. Also, here in 2025, you don't have to do all this math by hand. There are a lot of good websites and apps that you can start to use to kind of get a general idea of where you stand. So I have three that I normally use. I'll link them all in the description down below. But the first is NerdWallet, Bankrate, and Zillow. Another realtor actually suggested these other two, which I've never used, but they're called Mint, and then the other one is YNAB. I have not used these two. You guys can try it out and let me know how it works for you. And we're going to end this video with a couple pro tips. For every 1% increase in mortgage adds about $200 per month or so to a $300,000 loan. So just don't focus on the price of the house. You got to pay attention to the rates and get good rates when you can. Get pre-approved before you start shopping. That way you know exactly what range you're looking for serious sellers. And remember, there are loans out there for different situations. FHA loan with 3.5% down, conventional loans as low as 3%. It's not a standard 20%. I don't know where that theory came from. And VA loans, which are super amazing because you don't have to put anything down if you qualify. All right, so the big question is, how much can you afford for a house here in 2025? The answer depends on your income, your debt, and your comfort level as far as payments. If you'd like help figuring out your exact numbers, I'll be happy to connect you with a trusted lender in your area, anywhere in the United States or Canada, and they will guide you through a pre-approval process. My contact information is down in the description below. Thanks for watching. Please subscribe. If you'd like to know more about real estate or need any real estate tips, feel free to reach out.